But there's a growing division on what's next for the shares. Technician Carter Worth saying they're a sell here, while Credit Suisse just initiated coverage with a buy and a 201 price target. Wedbush is hiking their target to 220. Joining me now is Dan Ives. He's behind the Wedbush call, of course. Dan, it's great to have you. And I can understand why people look at the chart and go, okay, maybe this has come back a little too quickly here. What do you think?
Look, I think it all comes down to checks. I mean, our checks in Asia this week are showing firm demand in terms of going into iPhone 14. So you have 90 million units. That's flat with iPhone 13. You put that together with the services, I think this is a stock that's going to have a 2 in front of it.
So what do you make of, we take the clock back a couple months, Apple's in the 130s. We're talking about China. Why has sentiment been so whipsawed by this, for this stock in particular?
Look, I think it's really been a Hall of Fame performance by Cook. And you look what Cupertino's done, how they've navigated the China shutdown in April and May, and ultimately really come out, now going to hit the iPhone target where we expect to launch first week in September. And then it's really the demand story. I mean, despite the macro clouds that we're seeing, demand's holding firm and more consumers are going to the higher end iPhone. You put that together, ultimately, it was Armageddon expectations, and you're really starting to see come out in terms of demand going to next year looking strong.
I guess maybe what I would sort of suggest to you is, why is it trading so high beta? Apple feels like the kind of company at this maturity point that should be almost boring, like watching paint dry, that it's such a behemoth. And it's almost surprising to me that it's still the bellwether for the market, that it can still go down, whatever it was at the lows and still then be leading us back to the upside. It's more volatile, I guess I'm trying to say, than I would expect. And I wonder if that reveals some kind of lingering weakness or doubts about it.
Yeah, Kelly, I think it hits on a great point. I think it really comes down to the services. I mean, I think that's the big divisiveness in terms on the street. If we go back to pre-pandemic, services valuation, street's probably given 300 billion, 350 billion. I believe that that's ultimately worth today 1.2 to 1.5 trillion. I think that's really the debate. It's going to continue to sort of be a divisive name in terms of where it should trade. But I think services, that re-rating that you're seeing, that golden install base that Cupertino continues to mine, even with softness in the macro, I think that's what comes out of our checks and valuation, which is why we believe this is a stock that ultimately goes back above 3 trillion.
Yeah, and maybe people would rather they're still a high growth name than a boring one that's kind of become a value stock. What is this? Is this a value stock or is it a growth stock?
Look, I think it's almost it's sort of the services piece is growth. The hardware piece in terms of iPhone cycle, I think you're starting to see more maturity. But I do believe the maturity is overstated. I mean, if I look, you have 240 million of 1 billion iPhones that have not upgraded in 3.5 years. And we believe 30% in China are going through a window of an upgrade opportunity. I think that's really the debate. And I think that's where many maybe sort of get the story wrong, is that the maturity, I think, is overstated relative to the pent-up demand. And ultimately, Cook continues to have that golden touch and really almost superhero-like in terms of what he's done here, getting through the COVID shutdown.
Keeping a company like this young forever, what is that, like Pinocchio or Benjamin Button or something? I don't know the right analogy, but it's very impressive for a company of this size. Dan, thanks for your time today.
Thank you.
Dan Ives joining me from Wedbush.
Shepard Smith here. Thanks for watching CNBC on YouTube.